Bonds are making a slight comeback after selling off in the wake of Ben Bernanke's comments last week. Here to talk about what might come next is Austin Berkelhammer. Welcome, Austin.
How you doing?
I'm doing pretty well. Now, back in February when we talked about bonds, you said don't blow out of your positions. We're going to reassess now. Is now the time to get out of your bond positions?
No, I still like bonds. I still like high yield bonds, but we do kind of want to look at a shorter duration than long term.
Now, why do you like high yield bonds? Because they got hit probably the worst.
So it would be a good time to buy. It was a knee-jerk reaction after what the Fed said, and people are looking for rates to rise, but the question still remains when.
All right. So where do you see the 10-year? Let's use that one at the end of 2013, and how will it get there? With a whole lot more stomach-wrenching turns?
I still think we'll see some volatility. With the uncertainty brings volatility out there. We saw some support around 262 in that area, and I think maybe that's probably where we'll hold in between 2.5 and 2 5/8 on the 10-year.
Do you think we moved too far, too fast in treasuries over the past week?
I do. I think it was a knee-jerk reaction about rising interest rates, and we'll see some buyers stepping back in.
When you hear Ben Bernanke speak, what do you, as a trader, listen for? Because after Ben Bernanke spoke, then we had other Fed heads speak. We had Richard Fisher speak on Monday, and that calmed things down a little bit. So are you just watching every single Fed member out there running around offering statements?
Kind of digest it all and look at how the market reacts and where we look to see rates going in the future. And right now, they're looking at numbers, and I think we need to look at the economy as a whole. And as the economy improves, we need to see those numbers improve along with it as well, not just dates saying the end of 2014 or beginning of 2014, that rates will increase.
Well, Jeff Gundlach over at Double Line now, he seems to be the face of bonds. Used to be Bill Gross over at PIMCO, and now everyone's watching Jeff Gundlach. He says that there's going to be more buying in the treasuries. He thinks it might get back under 2. What's your view?
I definitely see some buying in the treasuries. I mean, we've seen a lower GDP number today than expected, and unfortunately that might have the Fed step back from what they said, but they did not say they were going to stop buying. They just said at some point they're going to slow down.
Do you have faith that the almighty Ben Bernanke will be able to taper eventually without a lot more stomach-turning twists and pain that we've been feeling in the past week?
I hope so. I really do. But sometimes when you get into the press conferences and everybody picks apart every word, it's not your fault if the market does what it does.
And he's not going to be holding those press conferences for that much longer. President made it clear that he's done his time there and that someone new is going to be stepping up. Will that change the way you trade?
Let's see what happens.
Thanks a lot, Austin.
Thank you.
Thank you for watching The Street.